Now, the global luxury goods market is slowing, with the sharpest decline in Asia Pacific. Analysts point to cooling Chinese demand, a trend influenced not only by domestic economic pressures, but also by wider US China tensions affecting consumer sentiment and investor confidence. Now, to explain whether this slowdown is a short term cycle or a longer structural shift, we hear from Claudia de Arpizio, Senior Partner and Global Head of Fashion and Luxury at Bain and Company.
Actually, we consider this slowdown partially a consolidation of the growth of the previous year, partially the result of a market that is now again subject to the external environment. So we are in an economic slowdown everywhere. So China is the slowdown of the economy, is unemployment on the young generation from the first time, real estate crisis, but overall a sense that after a phase of very strong growth, it's just a phase of consolidation of this growth. And there is also a sophistication of consumers that after a period of really buying quite heavily these goods are more in a choosy phase. Consumers are questioning the value equation of luxury products. So sometimes they consider prices too high vis-a-vis products that has been stable in terms of creativity and innovation. Has been a period that has been called quiet luxury. So with the brands focusing on more classic items, iconic products.
Trade frictions and volatile currencies are piling on pressure.
The ones that manufacture in Asia, they manufacture in Asia more the American players in the accessible luxury positioning. So players like the Ralph Lauren, Coach, Michael Kors kind of brands. They are global sourcing and for sure thinking on how to think to a resilience of their supply chain, exploring also different sources of production outside China, so in general in Asia. So I think that we are more in a wait and see to see if the tariffs will stay. So if when the situation will stabilize, I think there will be maybe movements on their sourcing strategy.
Looking ahead, the key question is whether this slowdown marks a passing cycle or a more fundamental shift in the industry. Industry observers say the outcome will hinge not just on economic recovery, but also on how global brands adapt to shifting consumer habits.
I think that the prospects of this market are quite strong. So if we look long term or mid term to the growth of the middle class, we are in a period where we envisage another big wave of creation of middle class coming especially from Asia, but Southeast Asia with Vietnam, Cambodia, Vietnam are taking an important share of middle class growth also for the investments in production sites, plus a lot of touristic destination like Philippines, Malaysia, Thailand. So we see a lot of development, wealth creation in these markets. Then the question is if the luxury brands want to serve these consumers that will enter the market from the more democratic price points. At the same time, we have a question mark on the ability of the brands to offset this period of softness, reigniting desire and reigniting growth on their customers. So it's 50% the market condition and 50% the ability of the brands to really intercept this new growth. So I think it's a temporary cycle, but it's a lot in the hands of the brands.